Good morning, everyone. Today's the 22nd of January. This is Brad Matheny. This is the Plan Your Trade video for the day of the 22nd for Wednesday. We are looking at, again, a moderate melt up in the SPY. Let me spread this out, drag this over. This was left from my video late yesterday. So we had a fairly mild close yesterday. This is 2 hour. Let me go to daily. Markets were still up, as you can see here, but we're getting closer and closer to that upper range. And like I said, come back over here and show you, I have a cycle top, which should be setting up or already set up around the 20th. So I'm looking for a peak top type of a pattern right now. And I don't personally believe that this melt up has much longer to go. In fact, I think we're pretty much in this topping phase pattern, rolling into this type of a 22nd, 23rd, and then over here to the 2nd or the 3rd of February into this breakaway phase, moving down into this V bottom. So I've drawn it here. This is the V bottom section here. In fact, let me get rid of this from drawing yesterday. This is the V bottom section around February 9th, 10th, 11th. You can see where we're at up here. I think we're going to roll into a fairly quick sideways rotation and then break down into that V bottom through the end of this week and next week. Remember, we have 2 more weeks, this week and next week, to go in January before we move into February. So again, we are, beyond the channeling downward, which is this area here. I'll draw it in blue. And here. So we're beyond that channeling mode. Okay, we've broken up above that channeling here with this move here. We're kind of back into a inauguration post election inauguration rally. I believe that we're going to top out over the next day or two and roll back downward. So I urge traders to pay very close attention to how this market sets up and rolls. Now, the news that we have Trump executing multiple executive orders, and of course the lawsuits coming in. So I was talking to someone yesterday, at this point, this is why, if you take a look back here, I recommended getting to 80 to 85% cash back over here. There's a reason, is that we do not want to be overly aggressive through this rotation in the market. We need to see things kind of settle. And I think it's going to take at least another 20, 30 days to get things somewhat settled in the market. There's a lot of changing expectations, a lot of new policies, not a lot of new laws. And I think we're going to see a very, very volatile phase in the market. Like I said, the next phase appears to be a breakdown into this level, moving into a rally phase, potentially back up into the 602, maybe up in the 610, 612 area, and then another breakdown into this March 24th low. So we need to see how that breakdown sets up. Now, as I've drawn here, we could end up in this narrow range, just moving completely sideways. So understand that this deep V may be into this 584 area here. This peak over here could be into the 603, 604 area. And this bottom over here could be in the 585 area, thus staying within a narrow sideways tightening range. Or we could get extreme volatility moving us into this broader cycle phase. So ideally, I think that the markets are just going to trade sideways, and that's what it comes down to. Okay. So, cycle pattern for today is over here is a breakaway pattern in counter trending mode. You can see here we've gone back to bullish. So a breakaway in counter trending mode would indicate possibly a breakdown day moving downward. We are still in bearish bias trending. We do have that big crush pattern coming up on Friday. We'll see how that plays out. That to me could be the big down day, reversing this trend. And then you see we have this whole other week next week to try to push forward. Then we move into this rally phase on the in the early February timeline. So let's see how that plays out, guys. And that does align into kind of the ninth, 10th, evening star island right here. For example, an evening star is a peaking pattern with a deep low. So we have this rally, 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 carryover, crush, gap potential, evening star type island. Will be very interesting to see how this deep V pattern sets up right around the 9th, 10th, 11th, 12th, somewhere around there. But again, my estimation is a rolling of a sideways pattern. So we'll see how it plays out. Again, I've drawn my sell top, major top, bottom, buy zone. This is a deep V. Let me add that. Deep V bottom. And then here we move into a peaking pattern up over here, and then we move into a major bottom down over here. And that gives you a pretty good idea of, how this rotation is likely to set up. Now, remember, I'm giving you data that's 30, 60 days out into the future. So, a lot of things can change, but I'm giving you an idea of what's going to happen. And I will go through and clean up some of this past stuff. I know that people make comments about the clutter on my chart perpetually, but, it works for me. And that's all I care about. You can see between the lines, or I can come over here and show you, this, get rid of the bottom stuff. And I can show you an SPY chart daily. And here you can see the clarity of the formation in this chart. You can see that we've rolled just briefly into bullish trending as of yesterday. We've rolled off of this high. As long as we stay below this high, we're still looking at weakening price trend. This is a long-term envelope channel, which provides deep support. So in theory, when we get down into this deep support area or this deep support area, we're looking at a base or a bottom. And in theory, kind of funny, if we do get that rollover top, my low projection is roughly in this same area, which would be essentially like a carryover of that deep low projection. So again, if we get this rolling trend, I kind of expect it to be around the same lows of this envelope setting up over here, which is why I think we're going to end up in this type of consolidation, this expanding wedge type consolidation. And you can see here that, if we just come off of these for a channel, or if we come off of these as an expanding wedge, you can see the shape of the wedge setting up there and the channel setting up, which is where I think we're going to be through the next 2 or 3 months. I think we're going to really be struggling through this type of a rotation. Okay, so let's go take a look at gold and silver. Gold and silver were moving higher as of yesterday. You can see we've got a little bit of a move up to the upside here in gold. This is a 4-hour chart. This is a 4-hour silver chart on the right. Looking for silver to try to make a move up to this 31.85 area. And that's only about a 30-cent move. Gold is already breaking to the upside. So gold has made kind of a decent little move here, breaking away from that 27.20 area, which I've highlighted here, and really trying to make this move. You can see it's just ticking slightly higher right now off of this rotation. I think we're moving up to this 27.90 to 28.20 area in gold. And I think it could come fairly quickly. If you take a look at the gold cycle patterns here, we have a breakaway yesterday in bullish trending. We have nothing taking place today as far as a pattern. We have a bottom pattern tomorrow in counter trending, which could indicate a potential topping mode. And the way I would suggest that's going to take place is that we would rally up into potentially a top, a rollover type of a top. But again, I think that gold is clearly trying to make a move here. And you can see we're up above that 2720. We've come off of these lows. Remember, just a couple of weeks ago, literally 2, 3 weeks ago, we were down here at 2630, 2640, 2650. And now we're at 2770. We're up $100. Very clean move. And I think this is hedging risks. I think the long-term role of this is to move up to the 2820, 2840 area, setting up a new high and moving into the bigger expansion phase that I talked about earlier. Remember, we're in this big, broad expansion phase, which, which ultimately is going to potentially set up a peak up here near 4,300, 4,400. So where we're at in this mode, guys, is we are very early in this expansion phase. And as I mentioned to you and Drew earlier, the next move here is a rally up into consolidation, and then another rally up to the peak. And then we move into some consolidation before we attempt to break out. Okay, so we're going to be looking at this type of a move over the next 12 to 18 months. And it looks like we're just now getting to that breakaway move for the 2800 level, indicating that we're going to get a very solid rally phase up above this 2800 level, up into this 2820, 2840 area. And I think that's the next big move here. This move in gold looks like it really wants to rally through momentum here, hedging risks, and really just continue to melt upward up into this 2820, 2840, 2860 area. And I think silver will follow through. Silver will move up to this 3180, 3185 area, pause a little bit, and then try to make a move up here to this 3285, which again, silver has been up in that area before, back over here prior to or just after the election. But it's really getting from this level to the 3285 level, which I highlighted right here, puts us right back below these previous highs. And that's where silver will start to make the big breakout. So metals, I believe, are really moving in a mode where they are hedging risks, and they're actively moving to hedge global risk. And global risk is going to become a big issue, in my opinion, in 2025 as Donald Trump's policies to strengthen America continue to put pressure on the global markets. Okay, so let's go back over here and go to Bitcoin. Okay, Bitcoin daily running down through this cycle channel, rejecting off of these highs a couple of days ago. Let me get rid of this yellow line so you can see it. Get rid of this blue line. So we highlighted, and I probably wanted that blue line. That's fine. I highlighted back over here on this hourly chart. I think it was. Yeah, got to go back further. 4 hours. There it is. I highlighted yesterday how we had moved up into this channel, come back down, flagged out, moved into this lower area, flagged out, got into this dual zone, what I called it, broke down, retested these lows, rejected, and come back up here. And now, ladies and gentlemen, we've moved into a fairly solid continued excess phase peak pattern, which if you see rallies up to this area, comes back down and flags. So now, if we get rejection in this area, rejection is going to prompt a downward move. And you can see we're pretty well, breaking down right now. If you look right here, see what's going on with Bitcoin. We pulled back off of this resistance, failed to get up near this high. We're breaking downward. And I believe the next move is going to be down here to this 100,000 250 area, and then eventually down to this 92,300 area. Again, we move through this cycle pattern based on, probabilities. So at this point, until we're able to cleanly move against this high or above that high, which has continued to be a rejection area, and that's going to take some time to get through, I believe. The most logical outcome is that we are going to break down. We're going to test this low, this 100,250, and we're going to move lower down to this 92,300 area, looking for the phase 3 consolidation of this pattern. I've done a lot of videos about the excess phase peak pattern, and right now, like I said, the higher probability move is a continued breakdown, at least to this area, 100,250, then potentially lower into this 92,300 area, then consolidation, then an eventual breakdown, likely down into this 82,000. Well, where did I mark it? It's basically 100% measured move here. Let me mark it. So from here to here, Control CV, and from there to there. So yeah, so we're basically looking at right here, 76,450. 76,450. There you go. So the next move would be from here to here. And that gives you an idea of what would likely happen. So from consolidation, if we do set up a low here, right above this historic low back over here, then we would be looking at a breakdown to 76,450, potentially lower in the ultimate low category. But again, we have continued to have this consolidation around this low, 92,250, 92,300. We've continued to see that be a very solid low. Okay, there's my drawing out to 5. There's my pullback area. So understand that, we're really kind of looking to see what happens around that February. This is my opinion, that February 9 to 10 deep V low, that I think is going to play into the market. So if my analysis is correct, we're going to be looking at consolidation, possible little breakdown, and looking at a deep V low right over here around February 9th, 10th, 11th. We'll see how it plays out. Okay, that's it for right now. Looking for a pretty mild day. Not really expecting too much crazy. I think the markets are a little overcooked at the moment. To the upside, I think there's a solid reason for the markets to be objective, positive. But like I said, with the topping pattern and the move into this consolidation phase, and the fact that we're in this kind of a rolling excess phase peak flagging pattern, it makes sense to me that we're going to get a rollover and try to move back down here into this 587, 586 area, maybe down in this 583, 584 area on the SPY, looking for that deep V pattern around February 9th, 10th, 11th. So again, it just makes sense to me that there's euphoria around the inauguration, and now we're going to roll into some consolidation. and we'll see how it plays out. So just be prepared. That looks like the markets really want to try to roll over. They're somewhat overdone to the upside here. And it makes sense to me that, we should be seeing kind of a reversion back down here. We'll see how it plays out, but it makes sense to me that we should get some sort of a pullback leading into my deep V pattern around February 9th, 10th, 11th. Okay, guys, talk to you later.